Zoned Properties is a strategic real estate development firm that identifies, develops, and leases sophisticated, safe, and sustainable properties in emerging industries, including the licensed medical marijuana industry. The company acquires commercial properties that face unique zoning challenges and identifies solutions that can potentially have a major impact on the cash flow and property value. Here to tell you more is Brian McLaren, Chairman and CEO.
Hello, everyone. My name is Brian McLaren. I'm the Chairman and Chief Executive Officer of Zoned Properties. From our corporate headquarters here in Scottsdale, we've worked to build a foundation of real estate holdings, client relationships as a strategic real estate development firm highly focused on the medical marijuana industry. We view this as a very young, emerging market. It's an industry that's still finding its footing and still taking shape. And one of the things I'll talk about as a thread throughout the presentation is how we've worked to build a foundation so that we can adapt to this market as the marijuana marketplace matures, as different, more sophisticated business operators enter the market space, and how we can best position ourselves to adapt to those changes and take advantage to build value for our shareholders. So very much we view ourselves as one of the foundational companies. We were one of the first publicly traded companies on OTC that touched the space and have welcomed many new companies that have joined that marketplace. So what is Zoned Properties beyond just being a real estate development firm? So we view ourselves in our business model as kind of having three main focus points: the identification, the development, and then the leasing of properties focused on emerging industries, specifically in the licensed medical marijuana industry. One of the things that I think a lot of prospective and current investors will know very well if they've interacted with the space at all is that there's a lot of fluff. There's a lot of blue sky promotional material. So we worked really hard to separate ourselves, separate Zoned Properties from that part of publicly traded markets. We've built this company on the values of integrity, transparency, and we've worked really hard on our disclosure through our SEC filings to let shareholders know what we're operating, what our targets are, and really what Zoned Properties is as a company and who our team is. We put a high focus in the vision for the company in both the development of our assets and our value, increasing shareholder value, but also in our partnerships with the communities in which we operate. And that's key. I'll talk about that a little bit later on. But so many times in the marijuana industry, you see operators at odds with and fighting with and adverse to the local municipalities in which they look to operate. And we just see that as the opposite of what you want to do. You want to enter a market as a partner of the community, about educating members of the community, city councils, board of trustees, and we've been very successful at that in the properties that we own and operate. Part of that process is becoming an industry leader. So trying to influence the way that best practices are developed, how we examine and communicate aspects of our role as a property real estate firm in the medical marijuana industry. And we develop and share best practices through connections and executive councils. We work with U.S. Green Building Council on sustainable development initiatives, work with the Forbes Real Estate Council on sharing best practices with other real estate professionals in and out of the space, and really have tried to forge and build relationships across different parts of the real estate industry on really how we can build a strong foundation as the medical marijuana industry develops. How do we build value and mitigate risk? That's been a big thing for us. We believe that in order to best take advantage of future market opportunities, you have to keep a clean house. That's why we stay away from promotional activity. That's why we stay away from any sorts of toxic funding or capital raises, so that we can have a strong, valuable foundation in order to look at future adaptations to this industry and take advantage of shifts, potential future M&A transactions. And so how we've done that as a real estate company is by focusing on triple net investment grade leasing of our properties, and we'll look at the specific properties that we own and lease in a moment. And I'll talk a bit about a business pivot we took in May of this year, 2018, and some renegotiation of how we lay out our leases to include the second point here, which is advisory services. So as regulations shift and change, we see a lot of value in sharing our expertise and best practices with our clients, and in return, we've modeled a percentage-based lease structure around that business model. So we're positioned very well to grow with the licensed medical marijuana sector with the relationships we've built across the United States and in Canada. We'll go over some financials at the end. We've raised all of our capital through private placement rounds with specific individuals that support the mission of zoned properties, with about 10 million in assets and about a little over 2 million in liabilities. And for the past year, we've been delivering positive cash flows and net income for the company and for our shareholders, with about 17.5 million shares outstanding, no warrants, and a little over 1.25 million options that are issued and out. So in this strategic business model for our properties, and before we go into that, I want to show you an overview of our current property portfolio. So we're vested in 6 different properties, 5 of which are in Arizona, 1 of which is in Western Colorado. And our Arizona properties, 4 of which of those properties are leased and directly connected to medical marijuana operators, 2 of which are large-scale cultivation processing facilities, and 2 of which are retail dispensary sites. We've got a vacant lot in Gilbert, Arizona that's positioned for future development, and our vested stake in a large-scale property in Western Colorado that's spec'd for future development for cultivation, processing, and retail sites for medical, and is actually vested for recreational marijuana as well. So in May of this year, we approached our primary tenant in Arizona about creating a comprehensive leasing model for all 4 of the medical marijuana properties in Arizona. We approached them and said, we will lease you 100% rights to the 2 large-scale cultivation sites and the 2 dispensary retail sites. They control 2 licenses that are placed at those 4 properties, the 2 retail, 2 cultivation. So let's look at this as a long-term partnership for growth and for business success. Let's increase these lease terms to the year 2040, giving them full operational control of the facility. These are investment-grade triple net leases. But let's adjust their base rent to a standard industry average, which is fixed. And then on top of that, zone properties will contribute our best practice advisory expertise to them, help them make standard operating protocols at their operating facilities to decrease costs, increase overall output, and just increase the sophistication through technology, development practices at their facilities. And in return, they're going to give us a 10% advisory fee based on their gross revenues. So the focus now for zone properties becomes how can we best help our tenant and client at these facilities increase their business and their own revenue model, capture the most market share in the Arizona industry so that we can grow with them and better take advantage of growth in the medical marijuana industry. So a combination of both fixed revenue stream and a variable upside revenue stream. So trying to, again, build value and mitigate risk. And there's an important part of our different property holdings in the strategy for that model. And as we dive into the specific development of the 2 cultivation properties, I'll talk about that. So these 3 buckets for the zone properties business model, identification is extremely important for property development. Very complicated industry in terms of zoning and permitting regulations. It's what I have seen as the #1 stumbling area for medical marijuana operators that receive a license. This is not like any average industry where you just hire a real estate agent identify a piece of property and then hire a general contractor. So there are complicated, non-standardized regulations and restrictions in the local municipalities. And as I mentioned before, a lot of people enter these areas blazing. They don't build relationships with the local municipal agents. They don't talk with their local zoning committees, and they end up having a lot of problems. They get millions of dollars into the property development, which is our second bucket and area of expertise, and then they find they have a restriction in permitting, and they either can never end up developing, or they have to spend millions of dollars hiring zoning attorneys and experts to fix the problems. Seen countless properties do this, put millions of dollars into developing the facility, and then all of a sudden it actually can't be permitted and approved by the medical marijuana authorities in those areas. So the identification of the property is essential. Development of that property in a sophisticated, safe, and sustainable way, and then setting up the future operating leases for the properties which we own. And also I'll talk a little bit about the strategic advising for properties we might not own or acquire as we build relationships with potential clients. So this facility here is the warehouse commercial property in Tempe, Arizona, just minutes from Sky Harbor International Airport, Phoenix, Tempe. And the strategy we have developed for our client in the acquisition and development of these properties is to create a network of strategically located, located properties in the state of Arizona that eventually can be a chain for the vertical integration of serving the consumer and patient market. These large-scale developments that I mentioned can be very complicated in zoning and permitting, so we participate very closely with our tenants' clients in designing these facilities, especially for Tempe, Arizona, 60,000 square foot facility, which is now entirely leased to our single primary client in Arizona. And their goal for this facility is to be renovated and developed as a central distribution warehouse and hub. This facility is actually located not too far from one of Amazon's major distribution facilities in the country. And that model is a great one to mirror off of. If you're looking at the best way to serve patients and serve a consumer market for a product like medical marijuana, how do you capture the most of that market share? I mean, it's going to be by looking at convenience, high quality product, and a way to serve your patients and consumers in the quickest, most flexible way possible. Something I think obviously Amazon has had a lot of success at, and that model is a great one to mirror. So the Tempe, Arizona facility, 60,000 square feet of cultivation. It's licensed and permitted to grow medical marijuana, process medical marijuana, package, manufacture, and distribute. And one of the essential pieces in the Arizona industry, and each state is quite different in the way they've legalized and developed the medical marijuana markets. In Arizona, you have to have an operating retail dispensary in order to operate a cultivation, processing, manufacturing site. So the two dispensary locations that are leased and controlled by our primary client are set up that way so that it's a ticket to be able to then operate these large-scale cultivation sites. And the interaction between the two cultivation sites controlled by our client are essential. This centrally located high trafficked area for the distribution manufacturing site works with its sister facility located in northern Arizona, Chino Valley, Arizona, one of the best locations in the entire country and region for growing medical marijuana. Higher elevation, lots of sun exposure for greenhouse style growing, and you can control your environment. There's very low humidity, so that helps mitigate risks for the operating medical marijuana cultivator for mold and different types of mildew growth, which is a huge problem a lot of different operators have in high humidity and high weather extreme climates. In the development of these facilities and with our advisory services, we work heavily on master planning, the goal of which again is to assist our client and tenant in expanding their facilities to help them grow their business to capture market share. And in our new lease model, that's how Zone Properties is going to create the most return on our investments. As we help our client grow their business, capture more market share, they increase their revenues, we increase our revenues. So it's a great partnership. So the strategy with the Chino Valley facility, as you can see here in our first phase, is as we continue to expand and build these different greenhouses and operating facilities for the cultivation of medical marijuana, our operating client and tenant can expand their own business in the facilities and capture more market share. And that allows this sister facility to work with their Tempe, Arizona, centrally located facility to grow large-scale amount of product to serve the market and then process it and distribute it through their brands down in the other sister facility. We operate, as I mentioned before, heavily in building relationships with the local municipality, and we've done that in Chino Valley. As you can see here, the larger scale vision for the property, we've created a 5-year protected development plan with the town of Chino Valley in order to build out across the 2 million square feet of this property, with about 1 million square feet dedicated to the cultivation of medical marijuana, supported by renewable energy. And we also, in the acquisition strategy for this property, acquired a significant number of water rights. So that protects our operating client and tenant from having any challenges with their utility needs. Renewable energy meets the electrical load, and water rights allow them to pump directly from the local aquifer and not be restricted by different regulatory limits on municipal water or water flow rights. If we look at the market capacity for medical marijuana as projected by New Frontier data in 2018, you can see that the state of Arizona is one of the highest potential states for revenue of medical marijuana, coming in over $500 million. And that's one of the primary reasons we chose Arizona years ago, is we knew that this market would be expanding quickly, has decent regulations, and allows us to identify clients. And now we have one primary client that we've identified and partnered with to capture the most market share. We're also well positioned in the southwest area of the country to build relationships in states like California, which markets are going to be massive, Nevada, and in Colorado, where we already have contracted developments for future growth as we identify operating partners in that area. And Arizona specifically, you can see over the past year, and you can look at the data over the past several years, constant healthy growth of the consumer market of patients that are driving the overall revenue capacity for the market. And so, again, we have these properties that are now partnered and leased directly to a strong operating licensed medical marijuana provider in the Arizona market. We have the ability to highly expand these facilities up to 1 million square feet at Chino Valley and 60,000 square feet at the distribution center in Tempe, Arizona, to adequately meet the market as it continues to grow. Looking at some of our financials over the past few years, just to highlight my previous statement about building a strong foundation, we've worked hard to build a lean administrative office, not spending precious dollars on expenses that aren't directly tied to building capital value and return on investment for our shareholders. And you'll see over the past 4 years and this year to date, we've consistently improved and increased our cash flows and our profitability, constantly decreasing operating expenses and increasing revenues by strategically positioning ourselves in the leasing of these properties and identifying sophisticated partners to grow with. Healthy balance sheet, again, consistently growing assets as we bring in revenue dollars and reinvest those into the growth of these properties. Healthy liabilities. Actually, myself and one of our largest shareholders are the two 5-year debt holders that have that $2.2 million in liability, and constantly growing that shareholders' equity for our current and prospective shareholders. We believe that as we have repositioned our lease structure in May of this year, 2018, to include a fixed base rent as well as a variable upside rent structure that's modeled off percentage-based commercial lease style, that we have the ability to significantly increase the value of our portfolio, and we're planning on getting updated appraisals done on that portfolio to make public as the 2018 moves forward. really simple corporate structure, 5 members on our board of directors, 3 of which are independent, and we outsource and 1099 most of our corporate expenses. So anytime we have a project, our architect, our general contractor, our designers, all of these services are engaged externally so that we can base them on immediate project needs rather than having a high overhead payroll that is constantly bleeding the company of its capital resources. Focusing as much as possible on putting every dollar into the development of the physical assets which create value for us. And we've structured our board of directors and management around compliance and governance that mirrors us around NASDAQ level, so that eventually when we're positioned well and when appropriate, we can look at a potential uplist or even examine something like looking to the Canadian Stock Exchange. For any questions, further information, please visit our website, zonedproperties.com. You can see my contact info here. Always open to having prospective investor conversations, talking about the industry and building relationships with other operators. And Brett Moss from Hayden IR, always available to take questions. So thank you so much for listening about the Zone Properties story, and we look forward to working with you in the future.